Hello, good morning, ladies and gentlemen. Good morning to everyone in the house. If you can see my screen and you can hear my voice, kindly type in hi in the comment section so that we are all on the same page. And besides, I'm excited that my chat option is live back and I can communicate with you guys. So let's know if everything is fine and let's start the party. Okay, Carrie, good morning. Thank you very, very much. Glad to see you here again. All right. Paholo, okay, good morning. So let's see one more confirmation. Hey, 359, missed you yesterday. Good morning. How are you today? Okay. So, hi, Ashitaka, good morning. Okay, Olatom Tutu says is new here. Glad to have you. Boys 202, hi, how are you? Okay, 359. All right, I'm glad you are good. Musta says oil price super low. Well, it has been low since last week. It has been low since last week, and we've been expecting that bullish momentum since last week actually, and we are actually on the trend. So, welcome to yet another promising session of Extreme Speed Live, hosted by my humble self, Sheriff Daramola. As usual, it's time to fasten your seatbelt as I will be taking you on a trading journey where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us during the New York session. Well, we have a bunch of pairs we want to be looking at. We want to see how well these pairs have been doing so far. We started this week with about 6 pairs, I think. Yeah, 6 pairs. And we've been monitoring this pair since Monday, and we've been profitable. At least 75-80% of those pairs have been moving in the direction we projected. So now that we are here again, so let's run through this chart. Let's see what's happening, and if there are any advices, suggestions, I will be sharing them in due time. So I'll be advising you all to stay tuned in till the end of the session so that you don't miss out on any of the trading opportunities that I'm going to be sharing with us all here today. So without further ado, let's dive into the chart and let's see what is happening. So the first pair as usual we'll be deliberating on is the US oil, and on the US oil price, action has been moving just as expected as we've been bullish since the beginning of the week. And this is what we have here. During the course of the live session yesterday, we had a scenario around this point where we saw the breakout of the structure. And what my intention was that since we already saw this breakout of structure, and for those who didn't take advantage of that move during the course of yesterday, I advised you to wait for price action to either come to retest this area or probably this bullish trend line. Then we'll be looking for a bullish momentum from that point. But lo and behold, this is exactly what happened. We saw our price came back to do a retest of that structure here. In fact, we had multiple rejection of that level. So if you had missed the first one, you could have taken the second one. If you had made the second one, you could have taken the third one. And if you had missed the third one, you could have taken the fourth one. We had like 4 multiple rejection of that level, and price continued to the upside from that point. So right now, since the beginning of the week, since the breakout of the $92 level, we've been running with about approximately 300 pips at this point. And for those who actually joined from this point yesterday, you will be about 160 pips in profit at this point in time. So now that we are heading into the New York session today, what is going to be our plans on the US oil and what is going to be our expectations? Well, after looking at this chart this morning, the first thing I was able to do is to connect the series of lower lows, sorry, the higher lows. Let's scale up a little into the 3 hours time frame so that we can see what I'm talking about here. So on the 3 hours time frame, this is what we have here. Since last week, we see our price has continued to respect an imaginary bullish trend line. So what I did was to connect the series of higher lows. At this point, we saw the first touch here, we saw another touch here, and we saw multiple rejection of that level during the early days of this week before we saw the trend continuation to the upside. And what we had here during the course of yesterday, though price didn't get too close to that level, but we're still going to be using this one. So I was able to identify this bullish trend line. So going into the New York session today, this bullish trend line will serve as a guide. Now that we have this bullish trend line identified on the chart, what are we going to be doing with it? Well, before we go further here, I want to share with you the perspective we have on the higher time frame. That is, how did we get to this point of decision, especially for those who are not with us during the early days of the week. So if we scale up a little into the daily time frame, or probably let's say the weekly time frame, for instance, we had a scenario where we had a very strong bullish momentum that has held price action supported to the upside in the last 2 years. And one thing we observed before the beginning of the week was that price is right around that bullish trend line one more time, respecting that area with multiple rejection in the last couple of weeks, giving us a clue into a possible bullish momentum emerging from this point. So now that we have this scenario here, so we definitely want to be looking for bullish potential from this level. Remember we said if we see a breakdown of that level during the when we started this week, I told you if we see a breakdown of that level, then we will be seeing that as a signal that price is going to the downside. But if we continue to see patterns on lower time frame that supports a trend continuation to the upside, then we will get ourselves prepared to take advantage of that move. Now, when we scale down a little into the probably the 3 hours, 4 hours time frame, we begin to see that we had a breakout of this bearish trend line that we were able to connect. We saw this bearish trend line on Monday. We connected this lower heights that started in the month of June. So we were able to connect this lower heights. And one thing we said during the early days of this week was that if we see an outright breakout of that level, that should give us a confirmation, sorry, give us a signal that price is moving to the upside. So what we did now after identifying that breakout was to identify this key level at $92 mark, as we want to be seeing price break out of that structure to give us a further confirmation that things are actually going in our favor. And so what did we see here? We saw the breakout of structure during I think a couple of days ago to give us that confirmation that a bullish momentum is here to stay on the US oil. So with that information in hand, we identified the structure yesterday. We saw this after the breakout of that let me show you what I'm talking about here. So after the breakout of that $92 level, we saw a consolidation phase here, which transposed into a wedge structure. Then we saw the breakout of that structure to join the trend continuation. So yesterday I shared with you that we wait for price to come back to do a retest of this level to join the rally. So this has happened now. So what are we going to be seeing in the New York session today? First of all, let's see what happened in the last 24 hours. So in the last 24 hours, we have observed that price action has continued to reject the $95.70 level. So somewhere here. Hold on a second. Let's. So we've seen multiple rejections of this level. We saw as soon as price got into this area. Hold on. As soon as price got into this area, we saw multiple rejection of this level, giving us a clue into some sell-off happening at this point in time. That is, those who took advantage of this move from this point here are actually quickly doing some quick sells to take some profit. And what I will be saying here is that we want to be moving our stop loss to somewhere very, very significant. So let's look at the structure we have here. So if we look left, we can see that we have a structure around this area. We see our price has rejected this area. This area has been a demand niche in the past, so I want to be connecting this level together. So what I'll be doing here is to bring out my line chart here, and then we connect this this point. Let me see. I want to see the average point. I think $94 level. I think the $94 level. Let's give this a purple. Okay, somewhere here. So let's give this a label now. So we have the $94, 94.20 level. So going into the New York session today, we now have another level we want to be looking forward to. So what I'll be suggesting here is to, for those who are already in this trade, move your stop loss right below the $94 mark, so that we lock in some profit and we don't get caught up in unnecessary pullback that might be happening at this point. So right now, what I'm going to be looking forward to, especially for those who are not in this trade, should be looking forward to price to come back into somewhere around here. It could be somewhere around the $94 level here, or price could even come as far as this bullish trend line, where we look out for patterns on lower time frame that supports a trend continuation to the upside. So on the US oil, if you are not yet in this trade, then you want to be looking forward to price coming back down into the $94 area, which also shares a confluence with the bullish trend line we were able to identify. And then we look out for patterns on lower time frame that support a trend continuation to the upside. And remember, you might be asking now, where will our take profit target be? Obviously, well, we had a scenario here on the higher time frame where we were able to identify a zone between the $104 area and the 116 area as a TP target for the US oil from in a long-term perspective. And how did we identify that level? Well, we looked at the previous structure we had here. We had this impulsive move that started from the $124 mark that took price right back into the $85 level. So what we did here is to bring out our Fibonacci retracement tool and run it through that impulse leg. Then we aim at between the 50 and the 78.6%, which is our golden zone area as a take profit target for this trade, which will dovetail to a minimum of 1,200 pips and a maximum of over 2,000 pips to catch here as we continue to monitor price action in that direction. So this is what we are expecting here on the US oil. So our bullish buyers on the US oil still remains against the New York session today. And another thing I also want to share here on the 1 hour time frame, after looking at the current structure we have here, is to let you know that in case price does not come back into the $94.20 level, that is, price continue to the upside, then if we see a breakout of the $95.70 level, this area that has been a selling niche in the last 10 hours here, if we see price break out of that structure, then we want to be seeing this move as a signal. Then what do? We wait for price to give us that confirmation, which is likely going to come in form of a retest of the structure on our lower time frame. That is your 15 minutes, your 10 minutes, your 5 minutes time frame, whichever that is. We look out for patterns on lower time frame that supports a trend continuation from that point. So this is what we are going to be looking forward to. If there is an area in my discourse that you don't really understand, feel free to drop a word or two in the comment section and I'll be willing to be of help. So if you have any question whatsoever, feel free to drop it in the comment section, and I will be taking the next 10 to 15 seconds to read through the chat to see if there are any questions whatsoever. So let's see what's happening in the chat. Okay, Ram. Okay. All right. Okay, in the absence of no question, I guess we move on to the next pair, which is, what is the next pair we took yesterday? We took US Tech. Yes, US Tech. So on the US Tech, I was stopped out from my position yesterday with some profit. Remember, we identified a structure here on the US Tech. Hold on a second. Let's scale up to the higher time frame where we had the structure okay, so on the higher time frame, give me a moment, we had the scenario. So we've been bearish on the US Tech since last week, remember? So we took this move right from this point around here, and we've been about over 700 pips in profit on the US Tech. So now that we have this move right into our TP target zone that we were able to identify on the first day of this week, we identify a zone right between the $12,900 area and the $12,400 area as a take profit target zone that we want to be looking forward to. However, price got into that area, which some will have taken their profit, and for those who didn't take their profit, I told you to move your stop loss to somewhere right above the $12,900 level yesterday, if you remember vividly. And what happened during the course of yesterday's trading session, price took us out of that position. Now, when we scale down to the 1 hour time frame, we were able to identify a structure after looking at how the consolidation phase happened in the last 24 hours. That is prior to yesterday's live session. We identified this trend line, this red trend line, and we also identified this zone at the $12,830 level, which held price supported for close to 24 hours. We saw our price rejected that level. So what we said here, when we identified this, we said we decided to move our stop loss to above the $12,900 area because of this bullish potential that appears to be happening at around the 12,830 level. So one thing I shared with you yesterday was that a breakout of this trend line here will give us a bullish signal where price, a retest of that structure will push price to the upside, and that's exactly what happened here on the US Tech. So if you are taking that move, well, kudos to you. That is for counter trend traders and short-term traders. You are taking that move, kudos to you. Well, for the long-term traders, we still want to remain bearish on this US Tech. And where is that area we are going to be looking for selling opportunities on the US Tech? Well, if we look at the current structure we have here and consider the previous impulse leg, remember we have an impulse leg from this point at the $13,500 level that took price right into the 12,830 level. That is our impulse leg. So what we want to be doing is to find our golden zone area as our selling window. So we'll bring out our Fibonacci retracement tool and run it through the previous impulse leg. And what do we have here? So we run it through the previous impulse leg, and we have between the 50 and the 78.6% area as an area we want to be looking forward to for selling opportunity. So let's identify the zone and give it a label for visual clarity. So we have a selling window sitting right between the $13,150 area and the 13,400 area. So let me give this a label, please. Hold on. Let's give this a yellow. All right. So we have a selling window right here. So we want to see how price is going to react with this level. And before the selling window was identified, one thing also we want to look at this is this. Since the beginning, since last week, that's on the 16th of August, we've been seeing lower highs, higher lows, right? Sorry, lower heights. And I also tried to connect these lower heights to to find a resultant bearish trend line. So after connecting these lower highs, we can see that this trend line also shares a confluence with the selling window we just identified now. So what we want to be looking forward to is price coming back into the selling window and do something like a reversal pattern from that point. So we want to see price come up here into the 13,200 and 13,400 area with a reversal pattern. It could be a double top structure, your head and shoulder pattern, whatever it is, a breakdown retest of structure giving us a confirmation to join the decline to the downside. So that is one scenario we want to be looking forward to as a selling momentum here. And the other scenario is this. Right now, hold on a second. If we scale up to the higher time frame, that is the weekly or daily time frame, let's see what's happening on the daily time frame. Okay, let's use the daily time for instance. So if we look at what's happening on the daily time frame, we can see that we are on a very strong long-term bearish momentum since the beginning of the year, and I was able to connect the series of lower highs here with this bearish trend line. And if we look at the current structure we have in the market right now, we can see that price action is right around that bearish trend line here. So is price going to respect this bearish trend line and push to the downside? That is something we don't know yet. So we want to see how price is going to relate with this level, and the only way we can know is to identify a reversal pattern sitting right under that level. So right now, this is what we have here. This is the bullish trend line I just showed you on the daily time frame here. This one here, this is the bullish trend line, the bearish trend line rather, I showed you on the higher time frame. And price action, we have an engulfing candle taking us out of that structure, but we are not sure if this engulfing candle is going to push price to the downside at this point. So what we want to see is probably another rejection of that trend line. We could have another retest of that trend line, then that could, and if we see patterns that supports a trend continuation to the downside, that is price breaks down the structure, then we could be looking forward to join that trend continuation to the downside. So that means that price is not going to get to the sell window we identify here. But if price breaks out of that bearish trend line here, that is price breaks out of that bearish trend line here, and then we could be looking forward to price coming back to where it started this week, looking forward to reversal patterns that will support a trend continuation to the downside. So what you can catch from this analysis I just shared with you here is that price, the structure we have here is supporting a bearish momentum. So sorry for that, please. So right now, the current structure we have in the market on the US tech here is very, very bearish. So what we want to be looking forward to in the New York session is selling opportunities, nothing more. We're not looking for any bullish opportunities here. We're looking for selling opportunities unless we have an outright breakout of this bearish trend line that we identify at the selling window at this point. So let's wait and see how price is going to happen. So the first one is we are looking for selling opportunities. We are looking for selling opportunities right above this place. We're also looking for selling opportunities right around this area. So let's see where the reversal pattern is going to happen. Is it going to happen here? Are we going to have the reversal pattern here, or are we going to be having it here? So let's wait and see how price is going to be. So once we decide that reversal pattern, it could be your double top structure. I'm very sure you know your reversal patterns very well. It could be your double top structure, something like this. multiple rejection of that level, or a inverse head and shoulder. It could be something like this. Then we could join the decline to the downside. So that is the scenario we're looking forward to on the US tech. If you have any question whatsoever, feel free to drop it in the comment section and I will be willing to be of help. So in the absence of none, let's move on to the next pair. The next pair we're going to be looking at is the AUD USD. Remember what I told you AUD USD yesterday, where I told you I'm looking for bullish momentum on this pair? Well, things moved very well in our favor. Now let's see what happened here. Let's scale up a little to the 4 hours time frame. Let's see what we identified yesterday, what we were looking forward to yesterday. Well, hold on a second. I think it's appropriate we go to the daily time frame at this point. So on the daily time frame, what we observed here is that in actual sense, price has been bearish anyway, but something interesting happened during the later part of the month of July stroke the early days of the month of August, where we saw multiple breakouts and retests of that bearish trend line to give us a signal that we might be having a momentum shift anytime soon. And what followed after that multiple rejection of the bearish trend line is this engulfing bullish candle that took price out of that structure, which also took price out of the key level we identified as the 0.700 area. So right now we saw this impulsive move to the upside, and one thing we all know from a technical perspective is that whenever price breaks out or breakdown of a structure, we expect price to do a retest of that structure to give us that confirmation that price is actually going towards that direction. So right now we saw price come back into the 0.6900 area, and we also saw multiple rejection of that level. And I told you yesterday that we should get ourselves ready for bullish potential opportunity from this point in the market. Now, when we scale down to the 4 hours time frame, what did we see on the 4 hours time frame? On the 4 hours time frame, around the 0.6900 level, we have seen our price as respected that area with bullish potential. We saw our buyers gathered at this point in the market to push price to the upside. We saw the first touch, we saw the second touch in the month of August, and during the early days of this week, we saw our price had a consolidation around this phase. We had a tussle between the sellers and the buyers at this point. The sellers were trying to push price down. The buyers were trying to hold price to the upside. Finally, the buyers won after we cited this. Hold on a second. After we cited this signal that happened prior to yesterday's trading session, we saw the signal, and I told you that we want to see price come back to do a retest of structure here. That's around the 0.68850 area, where we want to be looking for reversal patterns to join the rally to the upside. And now when we saw this, we scaled down to the 1 hour time frame. We identified this buy zone here, and we also identified this level at the 0.6900 area, where I told you that right above that area is most appropriate for buying opportunities to happen. So if we are in a position right above this level, we are okay to go. And what happened in the last 24 hours, we've seen price move significantly well in our favor, with about 80 pips running in profit at this point in time. So right now, price is right back at the key level we identified on the higher time frame. Remember, we identified this key level at 0.700 area, which has been a key level that we are looking forward to see how price is going to relate with that level. So right now on the key level, you might be asking, where is that key level you're talking about? Okay, let's go to the weekly time frame and let's see what I'm talking about here. So on the weekly time frame, we had a key level sitting around the 0.700 area, and the reason why we identified that level is simply because that level has been a major determinant of price action in the past. If we go to as far as 2019, we saw how this area was rejected by the sellers. We saw a little potential of rejection here by the sellers, but it wasn't that strong. Then in the September 2020, we saw how price did multiple rejection of this level. Then later on in December 2021, we saw multiple rejection of that level, and price is right within this area. In the last couple of weeks now, we saw our price has been oscillating right around the 0.700 area, making this level a very significant level to reckon with. So that's the level I'm talking about right now. So one thing we can see in the last couple of hours right now is that this is the key level, the golden line here. So we can see that price has done multiple rejection of that level. Is price going to be pushing to the downside from here? We are not sure how that is going to happen, but the first thing I want to be saying here is to protect your position against any sudden reversal pattern. So if you have already executed this trade with us yesterday, kudos to you for identifying that for being on standby to be able to take advantage of that move. So what we want to be doing here is to move our stop loss to either break even or lock in some profit so that you don't get caught up in any unnecessary change in momentum. So what I'll be suggesting here is to move your stop loss to somewhere right below this 0.69500 area so that we can hold whatever we've earned on this trade. So let's see how price is going to relate with the 0.69500 level. So one thing, as we head into the New York session today, what are we going to be looking forward to? Now that we already in this trade already, and we've already moved our stop loss to break even, or probably move our stop loss to lock in some profit here, what is going to be our yardstick going forward? Well, we have the next level here at the 0.69500. Let's give this a label for the sake of clarity. So we have 0.69500 level at this point. So let's label this area and have it noted. So okay, we have somewhere here. So what we want to be seeing, what we want to be expecting, the first thing we want to be looking forward to is probably price is going to come back into this key level, into this level at 0.69500 area, where we'll be looking for reversal patterns on lower time frames. Could be your double bottom structure that will be sending price to the upside. So if that happens, then we want to add more position to our existing trade at this point. And if you are not in this trade yet, then definitely you want to be looking to take advantage of a buying opportunity from that point. That is the first structure that will be guiding us during the New York session today. Then the other structure is this. If we look at what has been happening since the beginning of the week, we can see that we've been finding higher lows. We saw the first high here. We saw the second low here, which is a higher low before this new high. We are not sure it is going to be a new high. So what I want to be doing here is to connect the higher lows that we've identified here. Let's bring out our line charts and let's connect these higher lows together. And what do we have here? Let me see. We have one here and one here. So what I'll be doing is let's identify this one here. So we have this one. So we have a bullish trend line now. That's the second parameter that we'll be using to guide our action. So there's the first one at 0.69500. So we want to see price come back into either of the zones, probably here or here. Then we look out for patterns on lower time frame, probably double bottom structure, inverse head and shoulder pattern, whatever that is, to join the rally to the upside. So if this happens, our take profit still remains the same. We still have the 0.71 area as our take profit targets, between 0.71 area and 0.715 area as our take profit target. And the reason why we have that area as our take profit target is simply because if we look left, we can see that we have a structure around here that has been a selling niche for participants in this market in the past. So we want to see how price is going to relate with that level during this week. So there is a likelihood that if price comes into that level, we could be having structures that will support a trend continuation to the downside, or we could be having an outright breakout of that level to give us a signal that a bullish momentum is imminent. So if that happens, then we could be joining the uptrend at the site of a confirmation in that regard. So the AUD USD, for me, on the AUD USD remains bullish for me as long as price continues to respect this bullish trend line that we were able to identify here. So that is our expectation on the AUD USD. If you have any questions, feel free to ask me by dropping word or two in the comments section, and let's see if we can relate again to make ourselves give ourselves better understanding of the market structure here on the AUD USD. Okay, so I think it's we just move on to the next pair. So the next pair we'll be looking at is the USD Jpy, and the USD Jpy too is also moving as expected. So let's see what's happening on the USD Jpy. So we have something like this on the USD Jpy. Let's scale up so that to the higher time frame so that we can see where our decision came from. So on the daily time frame, we have a very strong bullish momentum here on the daily time frame. But as soon as we got into last week, we saw how the situation, I think since the later part of July, we saw how the situation transformed into another strong reversal pattern right above that bullish trend line. So we saw the first touch of the 130 level here on the first day of the month of August. Price came to our key level, which appears to be the neckline of the structure at the 135 Japanese yen area. Then price came back to do the second retest of the structure, which didn't go as far as the previous low, further giving us a clue that this bullish trend line is about to be respected one more time. And this move here took us right into the breakthrough of this neckline of this double bottom structure and giving us a matured reversal pattern. So what we were expecting since the beginning of the week is that price should come back to give us a retest of this key level to confirm that the bullish momentum here is very, very valid. So since the beginning of the week, we've been expecting the selling momentum to happen, that is move price right back into this neckline where we will be waiting at this bus stop to take advantage of a bullish trend continuation on the USD JPY. And now, because we'll be waiting for the selling opportunity to happen, I told you that for those who love doing counter trend opportunities, counter trend trades, this could be a very good opportunity to join the decline, which could probably give us about a 150 pips move to the downside, after which we want to wait for this buying opportunity here, especially for those who like taking long-term trade. So on the 1 hour time frame, what did we see? On the 1 hour time frame, a couple of days ago, I shared a structure with you here where I was able to identify this bullish trend line within this consolidation phase here. We identified this bullish trend line, and what did I tell you here? If you remember, I told you that a breakdown of that trend line should give us a signal that a bearish momentum is about to begin. That bearish momentum that we're expecting to push price down into the key level which is also the neckline of the reversal pattern we identified on the higher time frame. So we saw the breakdown of that bearish trend line, of that bullish trend line rather, and we saw multiple rejection of the 136.50 area. And one thing I said yesterday was that a break above this level is likely to push price to the upside to probably do a retest of that bullish trend line, where structures will support a trend continuation to the downside from there. But what happened yesterday was that price did not go that far. We saw our price came into I want to show you, came into the 137.2 area, and we saw multiple rejection that lasted like how many hours? That 1 2 3 4 5 6 7 8 good hours. We saw multiple rejection of the 137.200, giving us a clue that the selling momentum here is going to be very, very strong, as the sellers are very, very strong at this point in the market. So we saw how this level was rejected multiple times. This level here was rejected multiple times by the sellers to give us that clue that the selling momentum here is strong. So what I did here is, okay, fine, if we have this, I want to see selling opportunities right below the 136.750 area to give me further confirmation that the selling momentum here is going to hold. So what I did is to wait for price to break down the 136.750. We saw the retest, then we joined the decline. So if you are taking this move, kudos to you for identifying, to be on standby and identifying that opportunity. And I'm expecting that this selling momentum will continue to as far as the 135 Japanese yen area, which is the neckline of the double bottom structure we identified on the daily time frame. We should be dovetailing to about over 150 pips here to catch on this one. Now, I also want to share a caveat here concerning this key level at the neckline area around the 135 yen. What I want to say here is this: if price gets into this area and we see an outright breakdown of this level, then it's very likely, there is a likelihood that price is going to come and respect that bullish trend line we identified on the daily time frame, after which structures on lower time frame will support a trend continuation to the upside. So this area is an area we want to be looking forward to buying opportunity if you are a long-term trader. So for long-term traders, what you want to be doing is, this is the bus stop we are waiting for that buying opportunity to happen. After this move to the upside here from this point, we expect that price should come back to somewhere around here. It could be the neckline here, or it could come here to do a sharp rejection of this bullish trend line. Then we want to join the rally to the upside from that point. So if you are taking this counter trade opportunity, we have about 150 pips move to catch here. And if we are going to be taking this bullish momentum from here, where will our take profit target be? Well, that is very simple. If we look at the previous structure we have here, we have that impulsive move. That's the last time price tested that bullish trend line. We had that impulsive move to the upside. So what we want to be doing here is to extend this impulse leg into the future using our Fibonacci extension tool. So if we bring out our Fibonacci extension tool here and run it through this impulse leg we have here, where do we aim at? We aim at the 127.2 and the 1414 area as our next take profit target zone for any buy opportunity on this one. So if we take advantage of that move right from the neckline here, we want to have a TP target for buying opportunity right within the 139.750 area. So let's label it so that we have a visual clarity and visual expectation of where our TP target zone is going to be. And if that happens, we have about let's just take from here, we have about 500 pips move to catch here if price moves accordingly. So we have two setups here on the USD Jpy. The first scenario is the selling momentum, which is the reversal, the counter trend opportunity. That's for those who are comfortable taking counter trend opportunity. And if you are not, then please wait for price to come into the neckline area here, where we want to be looking for buying opportunity at this point. So this is our expectation here on the USD Jpy. If you have any question, please feel free to drop a word or two in the comment section, and let's see how we can be of help here. All right, so let's move on to the next pair. So the next pair we are looking at is the gold. In fact, the gold broke out of our structure yesterday significantly well, as the selling opportunity wasn't visible. And let's see what we have here on the higher time frame. Let's go as far as this area. So we have on the weekly time frame, if we zoom out and see what's happening on the weekly time frame, we can see that price has been bullish in the last 6 years. Is this 6 or 5 years? Yes, 6 years. Price has been very bullish. We have this major bullish trend line, which you can see on your screen, the thick black line on your screen. Then we have the second bullish trend line, which is a dotted line here, which I was able to, after connecting, see, we had the first touch, even in fact we had multiple touch here, we had a second touch here, and then we saw our price has been rejecting this area in the last couple of weeks. So because of the scenario here, we understand that the XAUSD has been on a bullish trend. However, if we notice what happened since in the last 2 years, we saw our price has been consolidating between the $2,075 level and the $1,690 level. We saw our price has been moving right within this channel in the last 2 years, and right now price came back into the demand zone of this channel, and we have been seeing multiple rejection from this level, giving us a clue of a possible bullish momentum in the nearest future. So with this scenario here, we scale down to the 4 hours time frame, where I was able to identify a bearish trend line that took price right from that supply niche that we identify on the higher time frame right back into this demand zone. So one thing we said here yesterday was that I want to see if this bearish trend line will continue to push price to the downside. That are we going to be seeing price respecting that bearish trend line during the week? That was the first scenario. Then the second scenario was this level at the 1754 area, where I said if we have multiple rejection of this level, okay, I think we were looking at multiple rejection of this level that would likely transpose into a double top structure, and we had the second rejection, and we were thinking probably price is going to break down that neckline to give us a signal that a bearish momentum is going to be valid. But what happened? We saw the breakdown. We saw the breakout of the $1,754 level, whereby negating any selling momentum from this area. So right now, price is right at that bearish trend line we identified on this 4 hours time frame, around this area. Hold on a second. So we can see this area has been holding price action in the last 8 hours. So we want to see how price is going to relate with this level. Are we going to be having an outright breakout of the structure? That is, price breaks out of the structure. Then if price breaks out of the structure, then we want to be looking for bullish opportunities, and that will only come when we see a confirmation, which is likely going to come in form of a retest of the structure. It could be the retest of that bearish trend line, or probably price will still come to as far as the $1,754 level, where we want to be looking for patterns on lower time frame that will support a trend continuation to the upside. So that's the first scenario here. And then the second scenario we want to be looking forward to is our price is going to relate with this level. Probably we're going to be having multiple rejection of this level. That is probably a double top structure, which will send price crashing to the downside. So this is what we want to be looking forward to during the New York session today. So let's be patient. Let's see how price is going to relate with this bearish trend line. That is the $1,760 level. We want to see how that level is going to hold price action. Now, to make things easier for us, I want to identify a structure here that we'll be using as our guide. So around the 1764 area, somewhere here. Let's make this a purple. So 1760. $1,762 level. So if we have $1,762 level, so let's have this right at the top. Okay, so we have $1,762 level here. If we look left, we can see how the structure has held price action in the past. We saw the support level, we saw multiple rejection by buyers here, so we could be having a buy momentum right above that level. So what we want to see here is an outright breakout, either an outright breakout of this $1,762 level, that is, price breaks out of that structure, giving us a signal. Then we look for confirmation in either a retest of this zone to buy the gold. Then the other scenario is that we look forward to a reversal pattern here, that is, price does multiple rejection of the $1,762 level to push price to the downside. So that level is a very critical level. We want to be patient enough to see how price is going to relate with this level, and it's very likely this could take around 24 hours, between 12 hours to 24 hours for this to happen. So patience is required here on the gold. So let's see what happens before tomorrow, and if we have a reversal pattern below that level, please get ready to sell the gold. And if we have a breakout of that structure, a retest should give us a confirmation to buy the gold against the future. So that is what we're expecting on the gold. We are going to be patient enough to see how price is going to relate with the $1,762 level to make a decision here. So be patient, please. Be patient. So let's move on to the next pair. I think that will be our last pair for today, the Euro USD. So on the Euro USD, remember, we're looking forward to a selling opportunity here. We actually identified a descending channel here. Remember, yesterday we identified a descending channel. Hold on a second, let me show you what I'm talking about. The euro has been very bearish since the beginning of the year, very bearish, and what we saw on the 4 hours time frame was a very strong descending channel that price has been respecting since on the 10th of August. We can see how that channel has continued to hold price action in a uniform direction to the downside. We saw this move, price respected, came back down here, touch again. You can see how this has been consistent in the last 8 days right now. Is it last 10 to 12 days right now? And during the course of the week, we have actually made some profit on this one. We took this move from here to around this point, which gave us about 100 pips. And one thing I was telling you a couple of days ago, prior to yesterday, was that we had this 0.99500 level where we thought price is probably, after the breakdown of this descending channel, we thought price is going to respect this 0.99500 area where we want to be looking for bearish momentum, but that did not happen. We saw this move, then price came back to the resistance point of the descending channel right now. So right now we are right below the $1 level, which is a very strong psychological level. So to make our job easier during the New York session today, I was able to identify that level after connecting this significant point. We can see how this area has been a major determinant of price action. We saw this level too as well. Price rejected this level. We saw our price rejected this level, and we're already having something like a sharp rejection here. You can see the shooting star candle around this area, giving us a clue into the strength of the sellers at this juncture in the market. So what I was saying, what I was looking forward to here, I'm already in the trade already. So when I saw this, I entered the trade right below the $1 level here, and I'm looking forward to my take profit target within this area at 0.98500, hereby dovetailing to about how many pips that is. That's around 150 pips to catch here. So now if we scale a little bit further to the down to the lower time frame here, that's on the 1 hour time frame, we can see that this candle is running in profit here. So what we want to be doing, for those who are not in this trade, what you want to be doing here is to look forward to probably a rejection of this $1.0 level, or probably this resistance point here. What we want to see is a rejection of either of these zones, then we take advantage of that move to the downside here. And if we have a further breakdown of the 0.99500 area, a retest of that structure here, or probably this resistance level here, should give us another opportunity to add more position to our existing trade. So we have a very simple setup here on the Euro USD, which is not difficult to decipher. So let's see how price action plays out during the New York session. So my take profit target on the Euro USD still remain at around the 0.98500 area. So let's see how that plays out in the next 24 hours here. So that is that today. We were able to take 6 pairs today, and I hope we get ourselves prepared for the New York session with these opportunities we've shared on this platform. So for those who missed out, who did not start with us, I'll quickly run through what we have done so far. So the first pair we deliberated on today is the US oil, and on the US oil, remember we've been enjoying a bullish momentum since the beginning of the week. And one thing I said on the US oil today is that for those who have actually enjoyed this move up to this point, you want to be moving your stop loss right below the $94 level to lock in some profit, or so that we don't get caught up in unnecessary move to the downside. And I also told you that for those who are not yet in this trade, there is still an opportunity to take advantage of this trade, as long as price continues to respect this bullish trend line we were able to identify. So we have a level here at the $94 mark, or this bullish trend line, where we want to be looking for buying opportunities. And how do we find that? What we want to be looking forward to is a reversal pattern around this point, that is probably a double bottom structure, which might look like this. Then we could join the rally from this point, and our take profit target still remains at around between the $104 area and the 116 area. But that's a very wide one, so we can choose our take profit target accordingly. So we went on to talk about the US tech, which was a pair that we've been enjoying selling momentum since the beginning of the week. Since the beginning of last week rather, we've enjoyed over 700 pips here on the US tech, and one thing we want to be looking forward to here is another selling opportunity. So right now I'm seeing this move that is happening right now as a retracement phase of this impulse leg. So we don't know where this retracement phase is going to end, but one thing we know for sure is that we identify the golden zone area, which is between the 50 and the 78.6% of the previous impulse leg, which is the selling window we identified here. So what we want to be looking forward to is price coming into this area to do a reversal pattern here, after which we can join the decline to the downside on this one. Now, the other thing I also shared with you here on the US tech is that um, we have this bearish trend line that was broken during the course of today. And let's see, we have this line here and we have this line here. So let's see what happens. Are we going to be having a reversal pattern? Hold on a second. Let me show. Let's see what happened on the daily time frame. I think this has been adjusted somehow. Okay. So like I said, okay, right now, this is what we have here. We have multiple rejection of this trend line we identify on the daily time frame. So we want to see how price will relate with that level. Are we going to be having a reversal pattern from this point? So that's one thing we want to be looking forward to. So if price does a rejection of this trend line here, which is a higher low, sorry, a lower high, that is price does not go does not go above the previous high here, then we want to be seeing a double bottom structure that will send price going to the downside from this point. So on the US tech, we want to be looking for selling opportunities on the US tech. Then we went on to talk about the AUD USD that has been profitable so far. As you can see, we took advantage of the move from the buy zone we were able to identify here yesterday, and then we are about I think how many pips right now? We are about over 70 pips in profit at this point. Then I said for those who are not yet in the trade, before that I said you should lock in your profit right now, right below the 0.69500 area. Lock in some profit so that you can protect your position. Then I also said that for those who are not yet in this trade, you could be looking to take advantage of a trend continuation right if price comes back into the 0.69500 area, or probably this bullish trend line here. We look out for patterns that supports a trend continuation, then we can join the move to the upside from here. Our take profit target still remains between the 0.71 and the 0.715 area, which will be dovetailing to at least a minimum of 200 pips to catch on the AUD USD. Then we went on to talk about the USD Jpy, where from a long-term perspective, we are still expecting that bullish momentum to happen. Remember, we identified a scenario here on the daily time frame where we saw a double bottom structure. We saw the structure here. We had a neckline at the 135 Japanese yen. We saw the second touch and we saw the breakout. So we've been expecting price to give us a confirmation in the form of a retest of either the neckline or the bullish trend line here. So what I'm saying here is that there is a counter trend opportunity lying up for us at this point, where we want to enjoy that move to the downside if you are a counter trend trader. But if you are a long-term trader and you prefer to wait, then we can wait for price to come to either the 135 Japanese yen or the bearish bullish trend line here to take advantage of that move to our TP target at around the 140 Japanese yen area. So we went on to also talk about the gold, where I shared with you how price is right at a very critical level on the 4 hours time frame. We saw our price is right on the bearish trend line here, and to make our job easier, I was able to identify the key level at $1,762 level. And if we look left, we can see that this level has been a major determinant of price action in the past. So we have a structure there. So we want to see how price action is going to relate with this level. Is price going to respect this level in such a way that we have a reversal pattern around this area, like a double top structure that will send price crashing to the downside? Or are we going to be having an outright breakout of this level to give us a bullish signal, after which we're going to be looking for confirmation in the form of a retest of this level or this bearish trend line, or even as far as the $1,754 level, after which we are going to be looking for reversal patterns to join the rally to the upside. So that's that on the XAU USD. And then we close the day with the Euro USD, where I told you I'm already running in profit here on the Euro USD, but we were able to identify this descending channel here, and price is right at the resistant level of the descending channel, which also aligns with the psychological level at the $1 mark. So what thing I'm saying here is that after seeing a rejection of this area with this candle here, I took advantage of the selling momentum right below the $1 level. And one thing I also said is that for those who are not in this trade, for those who didn't take advantage of this move, Well, we want to be looking for another opportunity in the form of a retest of either the key level here or the bearish trend line. So if price comes back to this point or this point, then we want to be looking for multiple rejections or reversal patterns to join the decline to the downside. So that is that on the Euro USD, and I hope this has been very clear enough. So thank you for being around. So let's see how this the market goes. We were able to do US oil, US tech, AUD USD, USD Jpy, XAU USD, Euro USD. So let's see what happens in the next 24 hours. And I hope that when we come back here tomorrow, we'll come back on a good note to celebrate our profits on this pair so far. So thank you very much for being around with me today. I really appreciate, and I look forward to seeing you same time tomorrow, 11 a.m. West African time, 10 a.m. UTC, same place, Extreme Speed Live app. Tell your friends to download the app so that they can be part of this family tomorrow. And thank you for being around, and I wish you best of luck today. Bye bye.